The top players in the banking world used to be those with trillion-dollar balance sheets. Not anymore.
Earlier this month, Visa, a humble payments processor, became the world's most valuable financial services company.
Today, we dive into the colossal world of Visa, a staggering $14 trillion business empire that powers the global economy. The story of Visa's rise is intertwined with the visionary leadership of Amedeo Pietro Giannini, the founder of Bank of Italy. Born in 1870 to Italian immigrants in San Jose, California, Giannini was deeply influenced by his father's untimely death and his mother's resilience. These early experiences shaped his belief in the importance of financial accessibility for all, not just the wealthy. Giannini's vision was revolutionary for its time. He founded Bank of Italy in 1904 with a mission to serve the financial needs of immigrants and working-class citizens who were often ignored by larger banks at that time.
Giannini's uniqueness was to be able to understand that Italian immigrants were discriminated against and despised. He therefore stood by them to grow both the Italian-American community and all of California. He was one of the first bankers to lend money to middle-class and immigrants.
Giannini's innovative approach to banking, which included offering loans to small businesses and individuals, laid the groundwork for the modern consumer banking industry. His commitment to financial inclusivity and customer service became the cornerstone of Bank of Italy. As California's economy explodes, Giannini's bank achieves a new milestone. By the late 1920s, his bank surpassed $1 billion in assets. Through a series of mergers, it became the Bank of America. Under Giannini's leadership, the bank quickly expanded its reach, establishing branches across California and eventually becoming one of the largest banks in the United States. In September of 1958, Bank of America started a crazy campaign, what they call Fresno Drop. It was a bold and unprecedented mass mailing campaign. Bank of America chose Fresno, a city in California with a population of just 250,000. They mailed an unsolicited card, the Bank AmeriCard, to each of the 60,000 families in the city. This audacious move marked the first time in banking history that a credit line was given without a loan application. Each card had a $300 credit limit, a 1-month grace period, and an 18% annual interest rate. Usable at various merchants, this card was designed for every need. This marked the birth of the first credit card in the history of banking. This credit card was a groundbreaking product that revolutionized consumer finance. However, the launch was not without its challenges. Prior to launching the card, the bank's delinquency rate was 4%, which means when the time came to collect money, only 4% of bank's customers defaulted. However, with the post-launch of this credit card, the delinquency rate skyrocketed to a staggering 21%, which means 1 out of every 5 customers failing to pay their credit card loans. High delinquency rates and fraud issues plagued the early years of the Bank AmeriCard program. Despite these setbacks, Bank of America remained committed to making the credit card a success. The bank implemented rigorous credit screening processes, improved security measures, and educated consumers on responsible credit use. These efforts paid off, and the Bank AmeriCard began to gain widespread acceptance. The success of the Bank AmeriCard laid the foundation for the modern credit card industry. It showed how credit cards could offer consumers convenience and financial flexibility while generating significant revenue for financial institutions. In the 1960s, Bank of America began licensing other banks to use the Bank AmeriCard system and issue their own credit cards for a fee. This strategic move allowed Bank of America to spread the risk among multiple banks while leveraging its infrastructure. As Visa gained popularity, competition in the credit card market intensified. One of the most notable competitors to emerge was MasterCharge, later known as MasterCard. Founded in 1966 by a consortium of California banks, MasterCharge sought to challenge Bank AmeriCard's dominance. The rivalry between Bank AmeriCard and MasterCharge was fierce. Dee Hock, a visionary leader, played a crucial role in managing this competition. Hock's innovative approach to decentralization and collaboration among member banks helped MasterCard gain traction in the market. MasterCard's success demonstrated the importance of adaptability and strategic partnerships in the rapidly evolving financial services industry. Despite the intense competition, the emergence of MasterCard ultimately benefited consumers by driving innovation and improving the quality of financial products and services. The rivalry pushed both companies to continually enhance their offerings, leading to greater convenience and financial flexibility for consumers. The transition from Bank AmeriCard to Visa in 1976 marked a significant milestone in the company's history. Under Dee Hock's leadership, Visa transformed into a powerful and decentralized organization. Hock's vision was to create a global payments network that operated as a collaborative association of financial institutions. This decentralized model allowed Visa to leverage the strengths of its member banks while maintaining a unified brand and technological infrastructure. The rebranding to Visa symbolized a new era of growth and innovation for the company. Visa's ability to adapt to changing market conditions and technological advancements positioned it as a leader in the global payments industry. This marked the birth of the Visa card in 1976. Bank AmeriCard rebranded as Vacation-Inspired Savings Account and has since grown into one of the largest payment processing networks in the world. Today, Visa doesn't issue cards directly or extend credit. Instead, it partners with financial institutions that issue Visa-branded cards to consumers and businesses. Visa earns revenue from fees charged for processing transactions and from providing other payment-related services. Today, Visa operates in more than 18,000 banks, enabling millions of merchants to accept Visa cards and billions of transactions to occur seamlessly across the globe. Visa plays a critical role in the global economy by enabling secure and efficient financial transactions, fostering economic growth, and supporting financial inclusion efforts. With a market value of around $14 trillion, Visa is a financial giant, influencing commerce and consumer behavior worldwide. Technology and innovation. Visa is at the forefront of payment technology, constantly innovating to enhance security, improve transaction speeds, and offer new digital payment solutions. Visa's business model relies heavily on the four-party model. When you use a Visa card to make a purchase, there are usually four entities involved: you, the customer, the bank that holds your money, the merchant selling the product, and Visa, which acts as a middleman connecting all three entities. Visa operates a physical network, similar to a telecom or internet network, but instead of carrying voice or information, it carries money. This network connects about 18,000 banks and other financial institutions globally. Every time you use a card, a series of messages runs back and forth between the cash register or website and your bank to verify your identity and ensure you have the funds. This process includes authorization, clearing and settling the transaction, moving the money from your bank account to the merchant's account. A majority of Visa's gross revenue comes from data processing fees required to complete this practice. Service revenues consist of fees that Visa charges card issuers like banks for working with Visa-branded payment methods. These fees are associated with maintaining the trust in the ecosystem, enabling you to use a Visa card anywhere in the world where Visa is accepted. International transaction revenues account for a significant portion of the company's gross revenue. Beyond these main sources of revenue, Visa has been continuously investing in other types of payments that could bring more revenue in the near future. This includes B2B payments, disbursements, such as payments to Uber drivers or insurance payouts, and person-to-person payments. In the long term, these other forms of payment are expected to become an increasing part of Visa's business. Recognizing this lucrative opportunity, industry titans like Phil Purcell were eager to capitalize on the trend. Purcell, entrepreneurial from a young age, spearheaded the launch of the Discover card while at Sears, targeting middle-class shoppers. By the early 1990s, Discover was valued at $1 billion, posing a significant threat to Visa and MasterCard. In response, Visa and MasterCard formed an alliance to prevent member banks from adopting competitor cards, which Purcell saw as unfair. He joined American Express in reporting this to regulators, resulting in a lawsuit by the Justice Department. The lawsuit alleged Visa and MasterCard limited consumer choice and restrained competition, posing a massive threat to Visa's business. In the early 2000s, a group of retailers led by Walmart filed a class action lawsuit against Visa, accusing it of using market dominance to enforce excessive fees and restrict competitor cards, further challenging Visa's position. Mounting legal battles forced Visa to pay billions in settlements. Despite these challenges, Visa's record-setting IPO in 2008 raised over $17 billion, turning Visa into a market bright spot during a financial crisis. By 2023, Visa had become a dominant force in finance, with a revenue of $33 billion and a net income of $17 billion, processing over $14 trillion in payment volumes annually. Visa's success, marked by rising stock prices and a resilient outlook on consumer spending, would not have been possible without the ingenuity of visionary leaders.